Hello, welcome to the weekly economic snapshot. This week, we'll look at consumer expectations as measured by a national survey done by the New York Fed. Their survey hasn't been around as long as the University of Michigan survey, and it isn't as well known, but it does have a larger sample, which should make it statistically more reliable. Of course, while it is helpful to know how consumers are feeling and what they are expecting, sometimes what they do doesn't follow from what they say. In 2022, for example, consumers were very negative about the economy, but they continued to spend and the economy grew strongly. One of the questions on the survey asks about the labor market. The median chance of losing a job over the next year, estimated by respondents, is up since the beginning of the year, though it decreased in April and May. Consumers' reported expectations of leaving a job voluntarily have also been lower since the beginning of the year. This may indicate less confidence about finding a new job. However, it has increased a little bit in the past couple of months. When asked about their expectations about their household finances a year from now, we can see that the share who expect to be worse off has increased considerably from the beginning of the year, though it did fall slightly in May compared with April. Expectations about the inflation rate 1 year from now did increase earlier in the year, but came back down somewhat in May. Expectations for inflation 3 years ahead have been higher in 2025 than they were in 2024, but not dramatically so. This should give some comfort to the Fed. A key consideration for them is keeping inflation expectations anchored. That means that they want consumers and businesses to make decisions about price and wage setting that reflect a low level of expected future inflation. Thanks for watching. We'll see you next week.